Hi, Alan Stratton here from CostMatters.com. Back in college cost accounting, a major project entailed creating a manufacturing organization with at least 3 products. Life was simple then. I created the required products, complete with standards for selling price, material cost, labor cost, and volumes for sales and production. You cannot manufacture without overhead, so I created a couple of overhead departments, complete with their own spending. Overhead had to be applied to products, be absorbed into inventory, and flow through cost of goods sold. To answer this requirement, I totaled all of the overhead and all of the labor cost at the standard labor rates, multiplied by anticipated production volumes. Total overhead divided by total standard labor gave me a labor-based overhead rate. The rate was reasonable, at about 30% of direct labor. If only actual life was really that simple. In today's business reality, overhead is much more significant than my 30% of labor. Today we use activity-based cost, or ABC techniques, to analyze overhead activities and to trace them to products. And ABC does a good job of using cause and effect relationship in assigning cost. We use this now to build a computer model of the business. No problem here. It's almost like the college case. But life becomes more complex when we cannot find a cause and effect relationship between the overhead component and the products. Even now, calling the activity by a realistic name does not solve the problem. Sometimes we find that we are looking at the wrong thing. Products do not consume all cost. Customers also drive cost independently of the products that they buy. The fix in this case is also relatively simple. The only difference is that customers receive the cost on a cause and effect basis. But then there always seem to be some components of overhead that do not seem to have any cause and effect relationship to either products or customers, yet they're necessary to the business. For example, costs associated with the CEO do not seem to vary with either products or customers. What is to be done with these costs? My recommendation is to call them business sustaining. Business sustaining is the modern equivalent to overhead. Actually, business sustaining is a subset of traditional overhead. The rest of the overhead has been assigned already. However, the traditional concept of overhead can provide some guidance. It is now relatively small compared to other costs. Now that we've named the cost category, what do we do with the cost? One approach is to consider it similarly to the traditional selling, general, and administrative costs. In this case, we would simply charge business sustaining to the profit and loss statement directly in the period in which it is incurred. This approach is simple and understandable to all. In the end, the business simply needs to expect a slightly higher contribution from products to cover the overhead, just as we did in the past. However, there are cases where the business wants all costs assigned, often at the insistence of accountants who want to allocate everything. As a fallback in these cases, at least use an allocation basis that prompts desirable reactions. Allocating based on revenue usually means very little. In a semiconductor environment, we used a function of cycle time and wafer production. This had the strategic element since we wanted reduction in cycle time. Those operations that succeeded in reducing cycle time were rewarded with a lower overhead charge. Others have used directly assigned cost as a basis for charging overhead. Go ahead and get creative. In the end, rather than arguing about the best basis for allocating, it is best to assign every cost possible using a cause and effect relationship inherent to the product or customer. Use the principles of activity-based cost to guide this exploration. Thereby, any remaining overhead is a very small component of cost, not likely to adversely affect a pending decision. Then, whenever possible, leave the remaining overhead as a period expense that is not included in calculating product cost or customer cost. As a last resort, use a strategic basis to charge the remaining small component of cost. What's your experience with overhead allocation in your company? Please share them in the comments below. When cost matters, profits soar. This is Alan Stratton from costmatters.com. Thank you.